I am starting a 4-part series about understanding your numbers. I thought April was a good time because most of us have just done our taxes and are finishing our taxes. And so I know whether you want to be or don't want to be involved in your numbers, you probably have been involved in your numbers and you might want to make some improvements. So my 4-part series is to teach you, number one, between your operations, marketing, and finance, there are different key terms that you need to know and understand, and then you need to know how to calculate how you're doing. And lastly, you really need to understand how do they stack up against industry metrics so that you can make action-based decisions. Now, the detail and the numbers of understanding things like your KPIs, key profit indicators, are critical. You know, we start with those 3 areas of your business: operations, finance, and marketing. And as you know, I owned my own MedSpa in 1999 and sold that in 2005. And I have worked with over 4,000 offices across the country. My team, I can't do that all alone. I have a team of 25 people who are amazing. We do on-site events, we do financial analysis, work on getting venture capital, work on valuations, as well as marketing strategies, pay-per-click, website, you know, how to manage your social media. And what I'm going to talk to you about today are some of the things that my clients find confusing, my executive coaching clients. You know, understanding the difference between top line income and revenue. Income and revenue mean the same thing, and that's the money coming in. Hi guys, thanks for the comments. Looking at that money coming in, that's called top line revenue. That's the number that comes in before you take your expenses out. You know, most practices, less than 20%, actually about 10% of practices actually measure their matrices, their metrics. What I want to explain to you is what are the things you should be measuring? More importantly, how do you measure them? And lastly, how do those stack up against your competition or against the industry benchmark so that you know if you can do better or not? And then the 4th part, number 4, is the implementation, the strategies. How do you fix a situation once you identify it? So today my goal is to go over terms and vocabularies and things that might be intimidating to you, especially if you're new to the industry or haven't spent a lot of time on your financials and your metric tracking. Because like I say, 80-20 rule, there's less than 20% of the practices I run into that actually understand their numbers. And if they do, they understand their sales, maybe not their revenue per hour, maybe not their capacity. They may be confused about what a cost of good is and why to use that, where their labor costs should be, how much should I spend on marketing, how do I know if my marketing or social media is working. These are all the questions that I help practices with every single day. And so I'm excited to bring this 4-part series to you right during tax season and to go from here. So the important things to know for your profit and loss are income, cost of goods, expense, and net profit. Net profit is what we want to be focused on because that's the money that you get to take home. If you have $1 million in sales, but it costs you $1.2 million to provide those sales between labor and marketing, then you're losing money every year. And I know you notice that, even though you're saying, how can this be happening? I have all this money coming in. Where am I missing? What am I missing? How is this happening? You guys might have joined me for a webinar last month where I had a MedSpa bookkeeper on to talk to us to understand some of the really important things that you need to know when you're working on your numbers and why you need to use cost of goods. You know, it might not matter to you today, but in 2 or 3 years, if you want to sell your business, there are things that you need to track in order to make your business loan bankable. There are things you can do to increase the value of your practice for a few years before you sell your practice. There are things that you need to look at if you're going to buy a practice. You really have to understand from someone in the industry, how is this practice doing? A basic accountant or CPA, they can read the numbers, but they don't know if the numbers look right or good. All they can do is give you the financial picture. And as you guys know, this is a retail-based business. This is a business of luxury and wants, not needs. So if you've come from a practice or a part of medicine that was not elective before, sometimes that is pretty confusing. Number one, you're surprised what women will pay, what clients will pay to look and feel their best. And even though they used to gripe about a $20 or $30 copay, that's the same person that shells out $6,000 for laser lipo No problem. So when we work with a lot of gynecologist offices, functional medicine practices, as well as family medicine, urgent medicine startups. And so to really explain, how do you price? How do you create an irresistible deal? How much should you discount for packages? How much should you discount on your promotions? All of these things are run by the numbers. So as much as you might want to run away from your numbers, I know you feel like you can't right now because you've just been dealing with taxes. I'm here to make your numbers easy to understand, and that's where this vocabulary of things seeming kind of complicated and overwhelming can come in. So your profit and loss, the first section is income. If possible, having that by profit center, say like by injectables and by laser like IPL, and maybe then you do a resurfacing. We want to see how much you're making in each area so that we can understand how you're doing against the capacity of your staff and your facility, and what you need to make profit margin wise in order to have that 20% at the end of the year. If you've done $1 million in revenue, $200,000 should be left over at a 20% profit margin. I see sometimes up to a 30% profit margin. The 20s are amazing. A lot of people are in the teens and the 5s and the 3s and the negatives. And I know we've all been through a lot of opening and closure and business that's interrupted with the past 2 years. So now is the time to measure and get on track. So when we talk about the profit and loss, many people cannot find why that is useful. And I can tell you, if we structure your profit and loss correctly, it is 100% valuable. It's like having your speedometer and your gas gauge in your car. You need both of those things, but it is garbage in, garbage out. So the setup of your chart of accounts is really important. The chart of accounts just means under income, your chart of accounts might be toxins, fillers, laser, muscle building, microneedling. It just depends on what you're doing. And then that's your total income. You can also find that in your database, but you do need to understand where the services are coming from and how much you're doing, so we can understand down to revenue per hour, revenue per week, revenue per staff member. Then you move into the next part of your profit and loss, which is your cost of goods. This is an area that I find a lot of people do not utilize. A lot of practices don't understand this because their accountants and CPAs don't understand their business. That's why if you can work with a consultant or someone that really understands the industry, someone niched in this industry, this will help you save a lot of time and energy. In your cost of goods, that is the cost directly in order to give the service. So an easy one is if you're doing toxins, then you're buying toxins. And we all know you buy a toxin, you mark it up by about 100% or double it, and that's what you're selling per unit. And so basically, if you showed $2,000 in toxin sales for the week, you're going to have approximately $1,000 worth of toxin cost of goods in your chart of accounts. And you can see that. You can even subcategorize your labor between like your injectables and your different services. And that's a little more advanced. I'm going to get into that later. But I promise you, when your profit and loss is set up correctly, you can look at it and say, okay, how much money did I make in this department? How much did it cost me to get the supplies for that? And what were my labor costs? And what is my profit at the end? What percentage is that profit? That is important to know your profit by service or treatment appointment. So then the next part is your general expenses. That's going to be things like marketing and labor, rent, insurance, office expenses, equipment lease payments, things like that. That's going to be where the bulk of your expenses are, and those are expenses that are not directly required to do a service. Now back up to that cost of goods. Buying like a new disposable treatment head or microneedle, RF microneedling cartridges, all of those are a direct cost of goods. You cannot perform the service without having those. So the cost of goods things for injectables are like needles and alcohol and numbing cream and your toxins and your fillers. When you talk about your lasers, it's your disposables, it's your ultrasound, if you have to have an ultrasound fluid, if you're buying grounding pads, if you're doing replaceable cartridges. All of those things are costs of goods. And it's kind of like having a mortgage versus having a credit card. Things look better if we can have them. The expenses required in cost of goods are really clear and defined. And you want to be following that metrics and using that, okay? Because the other variable expenses, other than rent, are pretty much controllable. So when someone looks at your books, if they're considering buying your business, you're considering selling it, or you're looking at buying another business, those percentages, we all know that sometimes as a business owner, we'll put anomaly expenses in there that are not required to run the business. So they will pay a lot of attention to your cost of goods area and your labor, as well as your marketing. Now, when we talk about marketing, underneath marketing and advertising, we do need to have website, pay-per-click, pay AdWords, Google AdWords, any paid social, even your systems that you use for email communication can go in there. Everything that it's going to take to market your practice. If you're doing a lot of real self, if you're doing, of course, radio, TV, print, billboards, those things. But whatever you're spending online, even promoting your events can go in there. So, that marketing can be anywhere between 5% and 20%. Up to 20% is what you see for the first year for a startup. If you need help with startup budgets or understanding those budgets, please reach out for a complimentary consultation. You can click the link below and do a practice diagnostic to identify where your challenges are and meet with us completely free to talk about how we might be able to help you and the different options we have. So with the profit and loss, we've talked about the income, and we do want to see that by service type so that we can then look at it against how much it really costs to render that service. So say it's injectables, or you can divide it up. Hopefully it's injectables with the subcategories of toxins, fillers, and other injectables. Then we want the cost of goods to be your injectables. And again, if you want to sort that by toxins, fillers, and other, you can. Which brings us down into the regular expenses. Let's say you do a campaign specifically for injectables. Maybe your April month is all about injectables. We can even subcategorize your paid Google ads into injectables to where you can really see that. Based on also the next payroll area, we can actually put them into departments so you really know how much did it cost to provide those services that are injectables. Maybe it's a certain RN, maybe it's an RN and a doctor. Maybe we look at the revenue against their part of their labor. You can even take a paycheck and you can split it between surgery and injectables as an example. So you can truly see how much does it cost you to render these services and what is your profitability. So I mentioned that at the bottom line, so you've got top line revenue, which is called income, or it's income, revenue, earned revenue, which is interesting because in this industry, you know that we sell gift certificates. We also sell a lot of prepaid packages. So depending on whether you're running your QuickBooks on accrual or cash basis, you might even be using a prepaid income function and then taking that revenue across when you earn it. And this is a little bit more advanced. So I'm going to talk about this one-on-one. If you guys want to be part of our VIP group or you want to talk to us, like I say, click the link attached and it'll let you schedule an appointment after you fill out your diagnostic. But it's that detail that is available. So when we talk about understanding your KPIs, it's key profit indicators. And that means what is your conversion rate? The number of leads you got, to the number of forms they filled out, to the number of calls you did, to the number of bookings you got, to the number of closed consults, to how much did they buy. There are KPIs in all parts of your business, whether we talk about financial, operations, or marketing. Your marketing KPIs are things like what is your cost per lead? What is your cost per sale? What is your lifetime client value? Your operational types of KPIs are what is your percentage of your labor? What are your cost of goods percentages? What are your gross margins? What is your profitability? What is your pricing? What does your compensation look like? Gets really important as we look at what is the multiple of your staff. So we do run a capacity analysis. We show you what you should be averaging per room. We show you what multiple your employees should have. So for an example, an RN should have about a 5 to 7 multiple, meaning for every 100,000 you pay that person a year, they should be making 500 to 700,000 for your business. Now this is especially important when you talk about surgeons being, a 7 to 10x return on investment or multiple, or you talk about an esthetician being a 3 to 5. And then how much retail should they sell? Should they be shooting for 25% or 50%? Well, it's different depending on what services they're doing, because percentages can be tricky. When you're doing if you're billing out $1,000 an hour as an injector, your goal might be 25%. If you're billing out $200, $300 an hour doing hydrofacials, you're at a 50% to 100% ratio that you should be able to create. Now, those are some details that I'm going to get into in this 4-part series, so I hope that you can join me next week. I'm on every Tuesday at 11 Pacific. We'll be on Facebook and Instagram, and this is just free education for you to understand how to run your business by the numbers. Do not be intimidated by the numbers. I swear they are your friend when they get set up correctly, and when you know whether they're helping you or whether you're above industry average or below. Because if you're already killing it in an area and you've got optimum profitability, then we don't want to waste our time trying to fix something that's already great. We want to focus on the area of opportunity. And that's why it's so important to understand those key profit indicators. And like I say, they're in the income area, they're in the cost of goods area, they're in the expense area, but you have to understand what you're looking for. What is a good conversion ratio? Well, 75% or better. What is a good closing ratio? Again, 75% or better. What if it's a paid social lead? Okay, 10% or better. Why are paid social leads so much less expensive? Because it's a numbers game, and it takes a lot more of them to turn into money. How do I set my goals for my new injector to hit then bonuses? Well, we have to look at the multiple. We look at her experiences. Her experience, we look at the level. Is she a level 1, 2, or 3 injector? Is she a nurse practitioner? Is she a doctor? What's required in your state? How do you pay that person? Well, you look at that 5 to 6 multiple and know that, okay, if I'm going to pay her $100,000 a year, if she's not making at least $500,000 a year, this is not working for you. So those are the kinds of things that we can help, whether it's a compensation plan or sales training or consultation training or conversion training. Your lowest cost per lead is social media done correctly. Maybe you need to take one of our courses or have us do that for you. At Projected Growth Consulting, I've been in this industry since 1999. We have helped over 4,000 clients. We are in 50 offices every single month across the United States doing on-site sales events for our clients. We sell anywhere between 12 to 18 million a year at those events for our clients. So we're here to help you understand your business so that you can be profitable. This is a retail business, and it requires understanding your numbers and understanding your pricing and your profit in order to make the money that you deserve to be in this business of making your clients feel good and look good. And I'm here to show you exactly how to do that. Now, next week, I am going to focus in on understanding your revenue per hour and your expenses per hour. I'm going to focus on that income part of your profit and loss, and we'll get a bit into the expenses. Basically, your profit and loss is where I'm going to focus next week to educate you on what you need to be tracking and how to track that. Then in the next following weeks, I'm going to go through all the conversion and digital sorts of matrices and numbers that you need to understand of how is your marketing working? What is your return on investment? That's a word that comes up that people don't know. ROI, return on investment. And that can be about your marketing. It can be about your staffing. It can be about even your supplies. So we always want to get down to what is the capacity and what is the potential revenue that you can make in your practice with your equipment and with your staff. Then we want to look at what are you actually doing. Then we go into the profitability of your margins and seeing what that is, which brings us to understanding how much should you make in a room with different kinds of staff members, and do you have the right equipment? Do you have the right services? Are you offering high enough services to where you can balance things like laser hair removal that don't have any profit in it with things like maybe RF microneedling or PRP treatments, or maybe we're talking about muscle building, fat reduction kinds of technologies. But we have to talk about how do we make money in your ancillary services so that you're not only making money by surgery, and that way there's some freedom for the owner and the doctor of the practice to know that your retail is over 10%, that you're making, at least $1,000 an hour in these ancillary rooms, that you're making, $2,000 or $3,000 an hour if it's anything minimally invasive or surgical. These are the things that you need to know, you need to understand in order to be profitable for the long term and to make the return on investment of your medical school training, the blood, sweat, and tears that you put into running your facility, motivating your staff, creating a positive company culture, and doing everything that it takes to have a successful business. We are going to break it down this month of April, and we're all about the numbers. So join me for the next 3 weeks, and I will make sure you understand your numbers and that we are here to help you. At PGC, we either want to teach you how to do it on your own, do it yourself. We have online courses that are immediately available to you, or do it with you, help you with coaching sessions along with the courses and programs that we have, or outsource it to us completely and let us take the work away and make it easier for you. So thanks again for joining us. Click the link below for your complimentary practice diagnostic, and if you'd like to chat with us, we would love to take a look at your practice diagnostic and share with you the different ways that we can help you along the way. If you enjoyed this video, be sure to like and subscribe and click the notification icon to be notified every time we post a new video. And don't forget to grab your free copy of our book and all the resources we've provided. You can find the links in the description below.